video supports the DairyBase analysis course and will show you how to enter financial data for the case study farm. We're working on the Michael and Mandy Margins case study farm, and I'm using the completed DairyBase input sheets to find the data. Entering financial data in DairyBase is pretty straightforward if you're using the standard chart of accounts, the dairy standard chart of accounts to arrange your finances, which we have done with the case study. One thing to note before we start is that you need to make sure that you've adjusted the financial data to take into account the matching principle. Now, the matching principle is used to make sure that we match the income earned from the milk production for that year with the expenses generated to create that milk. So you will see in the case study that there's been adjustments made to take into account for purchases from last year coming into this year and for carryover expenses that were not paid in this financial year. We're going to start with income. Milk income should be net of levies, charges, and GST. So we really want to know the net milk income, which you can derive in the market milk states. You can derive from the end of year milk statement. In areas where there's step-ups paid, you will need to derive the income from the income estimation from the processor to include step-ups. Similarly, our livestock sales need to be net of commissions and cartage. We had some other farm income listed for the case study farm. Some of that was actually a fuel rebate that was received. In actual fact, that is better to be netted off the fuel expense in the expense item, but for this exercise we'll leave it here in other farm income. There was also some non-farm income, which included some farm management deposits coming into the farm and some proceeds from a non-farm savings account that we used in the farm account. So that's all our income. We'll save. Now we'll move on to expenses. And you'll note that these expenses have been adjusted as per the matching principle. When you're entering purchased fodder and purchased concentrates, make sure that you include freight in with the fodder cost. So we want to know what the cost was landed on farm. I think it's also an idea when you're entering purchase fodder and purchase concentrate costs that you cross-check this amount with what you've entered in the physical tab, in the feed tab. So in here you will have entered tonnages and a purchase price. So it's just an idea to check that your numbers tally, because what you've entered in the feed tab doesn't automatically carry through to the feed costs. So it's a good cross-check. Fuel and oil, so I could have netted off that fuel rebate from the cost of fuel. So that gives me our total feed costs. Now you'll notice the feed inventory change box has been pre-filled. This number is the value of the fodder that has been accumulated over the year, or used up so when you accumulate feed when your closing tonnages exceed your opening tonnages, or you may deplete your feed reserves if your opening tonnes are greater than your closing tonnes, so you've used up feed. So in this case study, they've accumulated feed over the year, so that we've put a value on that feed and it's counted as a negative feed cost. So that's feed that you've paid for but haven't used in that year. Now you can also see as we entering data, it's also giving you the calculation for total costs and those costs per kilo of milk solids, or cents per litre, or dollars per cow. You can actually change these parameters if you want to express them in a different way. Just going to save that. Now we'll move on to overhead costs. In this case, motor vehicle expenses were included in one line item, registration insurance, so I'm just going to enter it in insurance. Now that's our cash overheads. We also have some non-cash overheads. Depreciation is calculated based on the value of our plant and equipment. So we'll enter a value for the plant and equipment when we come down to assets. I've set the rate of depreciation, or the default setting is for 10% depreciation, which will give us a reasonable range of depreciation for machinery across the board. So that will fill when I've completed the assets. The imputed labour value, so this has come through from the physical tab when we entered our labour input into the farm. You can see we've got unpaid family or share farmer labour of 1.95 labour units, or 4,680 hours. DairyBase then calculates the value of those unpaid hours and gives you an imputed labour figure. Lease costs were for land lease in this case. Now we come to enter our asset value, and you can see some things have flowed through from the inventories we created in the physical tabs. So that's the value of our opening and closing feed inventory. Now our land and improvements. In the case of land, I'm going to enter the same opening and closing value for the land to show that it hasn't changed value over the year. Here's where we enter our plant and equipment. So we enter our opening value for plant and equipment. The closing value is going to be a function of subtracting the 10% depreciation plus adding in the value of any new plant. Need to include the value of the leased farm. And the value of other farm business assets. So now we have all our financial information entered in on our case study.